Speaking of those different assets, homes, whether it be funds in terms of superannuation and that sort of a thing, are there different rules that we need to adhere to?
Yeah, well, different assets are treated differently when you're dealing with them on death. So if we deal with superannuation, firstly, when that's passed, it depends upon whether it's being passed to a dependent or a non-dependent, whether it's a lump sum or an income stream. So all of that changes, also depends upon the age of the deceased when they've passed, particularly when you're looking at income streams. So as an example, if a superannuation payment is made to a dependent for tax purposes, then it should come out tax-free. So it's a lump sum amount, tax-free to the person. However, if it gets paid out to a non-dependent as a lump sum, and a non-dependent can be an adult child who's no longer dependent on their parents, it'll come out the tax-free component of that super payment. So that we've now got sort of concession and non-concessional portions. So the amount that was tax-free, there's no tax. The amount that is a tax, what's called a taxed element, the non-dependent will pay 16.5% in tax, and for any untaxed element, which might be in the fund, they pay 31.5%. So it's actually a big arbitrage between paying money to a dependent, which may be a spouse, as a lump sum, or versus a non-dependent, such as an adult child. So most of the time you work it out, you might pay the superannuation out to the dependent and get the tax benefits, and then within your will, with all your other assets, you might move those towards the non-dependents, and so you have like an equalisation as a result from that point of view. Property is another area, whether it's the main residence or not, whether the property is pre-85 or not, because there's different rules in relation to capital gains tax.
Okay.
So, for example, if you have a person who has, say, 2 properties and they're both pre-capital gains tax properties, you can actually claim main residence exemptions over both at that point. And there's issues around whether, you've got 2 years to dispose of it without any tax consequences, all these sort of things to consider. But if they've got 2 properties and they're both post, and one of them was the main residence, then you've got capital gains tax on the other one. Not on the date of death, but the disposal later on that you're dealing with. So it really depends upon the property, the asset, and who's getting it.
All of that you've just explained is the perfect excuse for why you need a good accountant. Okay. We've got Peter. Can you hear us?
Hello, yes.
What's your question, Peter?
In regards to, I was talking to my father the other day, and he was concerned about if he passes away or my mother remarries, how do you hold assets out of the will within a new marriage for myself and sister and brother?
Michael, your eyebrows were raising. You look like you want to answer this one.
Yeah, that's a common problem, Peter, and one we deal with regularly. The best way to deal with that is have a special type of trust provision in the will where your mother could have access to income during her life to look after her, but then on your mother's death, the capital can revert to yourself and your other siblings. Of course, under the law, your father has to look after your mother. That's the law, otherwise you can make a claim against the will. But to protect you, there's a special trust structure you can have in your will, and that's done regularly.
Anything you want to add to that, Michelle?
No, that was exactly what I would have advised. And you can even set up different, you don't have to just have one trust, it can be many trusts. So you may have a trust for each child as an example. So the key is who's the trustee and the appointer of those trusts, because they essentially control the trust. So for some reason, if you're worried that the spouse wasn't going to deal and give the money to the children for whatever reason, then you may want to consider whether you have not just one trustee but 2, and maybe the second trustee is either one of the children for each of the trusts, if there's a trust for each child, so they have some control over the trust, or maybe a third party, so whether that's a trusted advisor as an example, just so that your wishes, you're sure your wishes are going to be carried out once you pass. Leaving control to the spouse doesn't, in all those trust situations, doesn't necessarily mean that it may go to the children. So you've got to make sure you weigh up who you're appointing in control of certain assets.
Okay.